Good afternoon. It is Friday, March 16th, the day before St. Patrick's Day. And I spilled a little of my lunch on my shirt, and so if I flinch a little, you'll understand. Many years ago, working on a big transaction, I walked into a very powerful person's office, and just as I walked in his office door, I felt damp. And I had driven from Boulder to Denver with a felt tip pen upside down in my pocket, and I had a blotch the size of a bowling ball on my shirt. And it turned out okay, but you know how it goes. This week, a pattern is now a pattern. Interest rates stopped rising. We ran up from just about 4 1/8 at the first of the year, 4 3/4, and we've come back down nearly to 4.5, and we've stayed at this level now for almost a month. And it's one of those cases where absolutely everybody knew that interest rates were going higher, and so they didn't. There's more to it than that. The first piece, and maybe the most important piece, is consumer spending has all of a sudden weakened. And it's not really all of a sudden. Now it's 3 months in a row. Initial forecasts for very hot GDP in the first quarter of 2018, in some cases as high as 5% GDP growth, now down to 1.5. The newest inflation reports are soft. Nothing happening. We have a better understanding of the job market. We are hiring at a pace faster than the Fed's speed limit. But we're doing so because there are more and more people entering the workforce who weren't in it, and they're going to work for lousy jobs, and so they're not making much money, and so there's no inflation. In the written report next to this video, you'll find more charts than usual, and some pretty good charts on that employment situation. Other elements, the background noise had been that the whole global economy is in a synchronized happy time, and, well, yeah, sorta, maybe. Europe and Japan are just as fragile as they have been. Maybe the primary reason for Xi being promoted to emperor is China faces some really tough stuff. It has to get off its debt habit, and a consequence of the one-child policy means that China's workforce is actually shrinking now. And so its economy is going to have to go through some adjustments that it's been dodging for, almost 20 years. So long as that pattern holds, mortgage rates are going to tend to hold. Fed meets next week. The meeting breaks on Wednesday. We'll get new projections from the Fed, and new Chairman Powell will have his first full-dress press conference as Fed Chairman. And you can cling to that next Wednesday as one of the few islands of responsible, rational, competent public policy. I wish that were so everywhere, and it's not. And I try to be very careful with politics because I don't want to offend anybody. Everybody's entitled to their own opinion. But the changes that are taking place in the Trump administration have begun to get the attention of Congress. The tariff announcement last week was over the objection of the chief economic advisor, Gary Cohn, who resigned. He's been replaced by a man named Peter Navarro, who is a polemicist. He's a Fox News talking head with a set of opinions about trade which belong in the 18th century. And he's argumentative about them, and it doesn't understand the impact that they'll have elsewhere. Rex Tillerson's firing by tweet this week, you could see markets flicker on screen when the news broke first thing in the morning. He's one of the adults in the administration, and he really understands how the world works and how the world economy works. He is to be replaced by Mike Pompeo, who did go to West Point, but rose no further than captain, left the Army, business for a while, and was elected to the House in the Tea Party wave. He's a super hawk, super right-winger, and he is to be the new Secretary of State. Gary Cohn is to be replaced by Larry Kudlow, whom anybody who watches CNBC knows who Larry Kudlow is. Kudlow is a professional TV personality. He had some low-level economic jobs after college. He's not an economist. He's got a bachelor's degree, no formal economic training. That's okay, neither do I. Kudlow has never in his life held a job in which he would be responsible for any of the consequences of any of his opinions. They're catchy and neat and play well on the right side, but he's never actually had to do anything. The newest, which is worth watching, General H.R. McMaster has been the National Security Advisor. McMaster is a soldier's soldier. He's blunt. He wrote a book about Vietnam while an officer in the Army that nearly got him fired from the Army at the time, and was rescued by some other senior officers. He's now a 3-star general. He was one of the heroes of the First Iraq War, and very bright, very able, but was bound to clash with Trump. That McMaster has also been fired. Yesterday he was fired by leak, not by tweet. There are a variety of people proposed to succeed him, and one of them is named John Bolton, B-O-L-T-O-N. And John Bolton may be the most dangerous man in America, and it may all turn out all right. The political scene is about to get different in that in any election year, by about springtime, Congress is just immobilized. They have to begin to think about their campaigns back in their districts. And so nothing really happens in Congress. But it's in the nature of this administration that it feels compelled to do things, whether there's a Congress or not. And the markets have not reacted to much that's happened in the last 18 months, except pleasure at the tax bill and some other economic things. But national security matters, defense matters, the prospect of conflict, those things matter to markets, and they matter outside of markets, and bear watching. I'd invite anyone to Google the individuals that are leaving the Trump administration and those who are coming in. And by all means, when you Google, read sources that you naturally disagree with as well as the ones that you agree with, and see what you make of what's going on. Happy St. Patrick's Day to all of you.